Welcome, everybody. Welcome to my webinar. Welcome to our webinar, WoW Trades. This is me, myself, Alberto Alvarado. Let's begin. Well, for the ones already familiar with the format of the webinar, maybe this is tradition. For the ones that are new, it's just a reminder. I always begin my webinar with my background because I always have considered very important that every time that you're going to lend your ears to somebody that's pretending to tell you his ideas or her ideas on the market, it's very important that you realize that you know the background so you can more or less know where this person is coming from. Well, first of all, again, my name is Alberto Alvarado. I'm broadcasting from Mexico City. I am Mexican. I have more than 11 years of trading the financial markets. I started in 2005, and I lost my first live account in less than a month. But after doing that and after suffering a lot because of that, I realized that what I wanted to do for the rest of my life was trading the market. So I decided to take my self-education seriously during 2 years. And after 2 years, in 2007, I started receiving the first rewards of my efforts. Just to see my accounts evaporate again in 2008 in the subprime crisis in the United States, I decided I had to decide to leave it or continue. I decided to continue. But what the 2008 crisis left me as experience, was that my edge, or what I thought it was my edge, was not complete. And I decided to add to my comprehension of the market a very particular way to see the markets using intuitional elements, creativity, and subjectiveness. And it ended up working great for me. So what you see here is a result of all that plus the traditional fundamental analysis. The only thing that I do as fundamental analysis to keep up with the news. I don't have any major degree on economics or something, so I just keep up with the news. I read the analysis, etc. I am aware of in the financial specialized media, etc. And the other ones, the technical analysis. That is, I use traditional free tools like MACD, stochastics, RSI, Bollinger Bands, all with their standard parameters. So hope you enjoy. For the ones that haven't subscribed to my YouTube channel, when you receive the email of the recording of this webinar, you can check it out with much more calmer. And to add me to your YouTube and to subscribe to my channel, in YouTube you type IBB's Trading Room channel. It is here. You click subscribe. And for the ones that are interested in receiving updates on trades, etc., that I open or my insights, you can subscribe to my Google Plus channel. You look it up as IBB's Trading Room, or simply go in Google and type Google Plus IBB's Trading Room, and there it will show up a URL, a web page, and you can bookmark it. You don't need to have a Google Plus account if you want to. If you like the content and you want to be aware of the latest updates, etc. Well, what is for today? Of course, is a no-brainer, right? Well, first of all, we are going to review the trades that we open at the beginning of the month and how they are doing, if we have some trades closed or open, etc., and the potential dollar-yen scenarios after today's FOMC meeting, also known as the Fed decision. As you already know, maybe the most likely thing, and pretty much the markets are ruling out that today is a 100% possibilities that Fed is going to hike quarter of a point. But that's not the real deal on today's news. The idea is to listen to the speech and the reasoning behind this to try to track dovishness or hawkishness in respect of the next rate hikes. The markets are also ruling out that we will have at least 3 more rate hikes during the year. But the thing is that, and the question is, how much each rate hike, sorry. It is said that we cannot expect more than quarter of a point every time, but it's we have been having some gossip in the market that maybe the December rate hike could be even a point and a quarter. So the markets are more or less having an expectation and building up some expectations based on this speculation. And the speech after each Fed rate hike is going to change or confirm this view. And that is what is going to be translated in the markets in a way of volatility. And that is the way a trader survives in the markets, understanding that volatility and to know how to differentiate between volatility and true fundamentals. So we're going to check out, first of all, this is my binary account that I use for the trades that we opened during the webinar. And as you can see, we have 1, 2, 3, 4, 5, 6 trades already open. As you know, my expiration date for all these trades is the last day of this month, unless the binary option that I opened is specifically a touch or no touch, and for some reason the price touches those levels, then those trades are going to be closed beforehand. But as you can see, I'm not going to review each one of this. But just quickly, this one is dollar yen is strictly higher than 114.50 at the close of this month. Exactly now, dollar yen is at 114.72.8. Okay, so this is in positive territory. This the payout will be received if dollar yen does not touch 111.5. This is pretty much a certain fact. The payout of dollar yen and the payout will be received if dollar yen ends strictly between 112.50 and 116 at the close of on the last day of this month. We're going to analyze with the next information about this, because of this we are getting closer to this price, well, more or less. So we're going to see if we still have chances to hold this trade or maybe decide to close it next week. This one will pay out dollar yen strictly higher than entry spot at close on last day of this month. This is I don't remember the exact price, but as you can see, the purchase and indicative indicates that this trade is in positive. This is will be received if dollar yen does not touch the 113, and well, we are well above the 113, so this it's very likely that's going to survive till the last day of the month, and receive the payout if it's strictly higher than 114. Now we're 114.75, so yeah, 114.780, exactly 80. Okay, so these are the ones that are still open. There's been 4 trades that are already closed in profit, by the way. This one, the payout was if dollar yen touches 114.5 before the end of this month. So as you can see, we opened the trade. Well, I opened the trade here. We had a pullback, and then this shoot up to the 114.50. So this was closed in profit. The second one, win payout, dollar yen touches 114.75, and the exact same thing. We have a small pullback. Then we have this first leg up, and this was one pip from being close in profit, but the market continued with a fundamental trend, and it was eventually touched and closed in profit. This one win payout, if dollar yen touches 115 through the close of the last day of this month, as you can see, hesitated a little bit between this area, the 114.50, one time, two times, three times, but it couldn't hold it. The trend here is a fundamental trend, so it's very hard to stop it. And well, before continuing with this, these trades are indicative. I commented at the very beginning of the month my reasoning behind. I positioned myself in the right direction, apparently, and these flows are the consequence of that. But we need to remember that the way to trade is to focus on the potential losses, not on the potential profit, because the profits will take care of themselves in any case that you win a profit. The thing is that you mentalize yourself as if that trade is going to be closed in loss. That's it. That's the way to trade. I will always mention this during the webinar because this is, even if you don't like it, this is the way to approach to the markets. Every time before pulling the trigger, demo account or live account, you need to mentalize to make up your mind as if that trade is going to be closed in losses. Why? Because that is the only way that you can manage responsibly the risk. And that is what makes a trader. How you manage the risk. Not that if you win a lot, the risking a lot. That is not being a trader. That is being a gambler. And the idea is that you develop the habits of a trader, okay? So, well, we're going to analyze the evolution of the dollar yen just to see more or less what we can expect next in the FOMC. I strongly suggest you to stay aside, not to unless you're a very experienced trader, but if not, just wait. Don't try to chase the price. Don't try to chase the reaction after the Fed decision. It's very difficult. Don't consider just because the Fed hiked quarter of a point that it's a no-brainer that dollar will shoot up, etc. It's very relative. Let's remember that, and we're going to just comment this quickly. This post was on Sunday, I believe, on Monday, after non-farm payroll number on Friday. Quickly, I was reviewing the NFP was 20% above expectations, but an average hourly earning month over month was again below expectations, although it should be good enough to continue with rate hikes from next week and on. It gave some room to doubt since last time precisely this earning indicator caused some sort of dovishness from Fed members. This is what I was just commenting some minutes ago. The hawkishness or dovishness by Mrs. Yellen or other Fed officials. After this indicator, average hourly earnings, we have the latest two times, I believe, we have had some dovishness by them. So you can be sure that if that trend continues, you could have even more take-profit conduct and patterns on dollar. But it's very relative again. So that is what, just watch. If you're going to watch it, just watch it. Don't trade it. It's very tricky. And trading this kind of stuff is super tricky. Unless you're already in a good position, you can hold it, you can manage that trade. But if not, just don't try not to open anything just before or just after, okay? So accordingly to what was reviewed during the webinar, at any side of doubts, Friday might become a profit-taking day, and it did. I am still fundamentally and long-term bullishly biased on dollar yen, and the price boxes I consider to be relevant for next week are shown in the chart, okay? This is more or less the end of the week was here. So I was expecting that during this week, this at least at that moment, these three important price boxes were respected. As you can see here, the price stayed for a long time inside. This is a 4-hour chart. And then it tried to move up and just hit this at the pip, this resistance I drew here, and then it retraced and is still making accumulating support here. So in any case, that for example, after the Fed, we have a breakout to the downside because maybe the markets are spooked because of some dovishness, etc. We can still expect that this zone to maybe kind of hold any kind of further movements to the downside. Of course, they can happen, but at least the market, I expect to respect this zone in any case that this goes down. Because let's remember that differently from other pairs, for example, euro-dollar, cable, that are now more speculative than ever before, the dollar-yen is a pure fundamental trade because it reunites the strong bullish fundamental outlook on the American economy and the super bearish outlook on the Japanese economy. So this is a fundamental trade. So what you can expect at any sell-off is that you should find demand at some point. So I believe that if we have some sell-off, we could find some demand here. Attention, I'm not saying that if this goes here, you buy here. No, you need to do your analysis with time in lower time frames and to see what the market and how the market moves, and then to decide. These are only prices that I think are going to be relevant, and the relevancy of that is going to be from how the price moves inside those bands. Like for example here, I've been tracking since Friday the way it behaved here, the way it behaved here, because we have in the webinar I opened like 7 or 8 trades. We have 4 or 5 open still. So I need to keep up with this overall because we're very close to the psychological 115 that actually was broken here, retested here. So the risks of any potential pullback are higher. So I need to really keep up to know if we're going to close it beforehand, any binary option, etc. Well, the thing is that the price boxes need to be respected. As in here, the dollar-yen, the daily chart. This is the most important one. Okay, this is the daily chart. We've been tracking the breakout of this triangle. Okay, so the breakout happened. We were tracking, and actually, it was at the Spanish webinar when this happened. I was commenting, and I opened a trade here. I don't know if you remember that I just commented on a trade that the price should be above the 114 when it is closed. So I opened it here more or less, just at the time the market was retesting this. So it actually jumped. This is the important thing now, because this is a daily chart. What I do believe is that the price should, for the next days, this is more or less the end of the month, okay, more or less at this area. I believe that the chances for the yen to continue to go to the upside in a sustained way depends much more in how the market retests this zone for in the next days. So that is why I was just commenting some minutes before that we could have a sorry, that we could have maybe a pullback up to the close to the 114. But actually, that should be only to enhance way more demand here. At least that is what I believe. Overall, in this zone, for the next days of this, for the next hours of this week, I believe that any pullback to the downside will be considered as super supported and super demanded support here. In any case that a market doesn't manage, in my opinion, before this box ends jump or try to jump above here, then what we can expect is maybe the market to start retesting this zone, and maybe after that, maybe try to move here. In any case that it jumps after Fed, we could have here, for example, close to the 116, and maybe have the price here stabilizing between these two boxes. If you remember, I opened a trade. That was saying that the price should close below the 116 at the end of this month. So this is why I am tracking how these price boxes and the price action is related to this price boxes, because in any case that maybe I start seeing before, of course, that the price is possibly could close above the 116. Of course, I will close that binary option beforehand. What could be that scenario that after Fed today, whether we have a jump to the downside or not, maybe the price jumps here in this time span, jumps here, and then when it gets here, it is able to keep jumping here. Then the chances of having the price closing above the 116 by the end of the month are going to be very risky. So all depends on what happens today, how I will continue managing that trade. Any important update on this trade if I decide to close it or not? This is the only one that is really like making me noise. It's like annoying me, because I really see very difficult, even the one that is expecting the price to close above the 114. I am really not worried, because in any case the market really retests here. I strongly believe that before the end of this month, it will try to jump to these price boxes. Maybe it will get here, maybe it will get in some point here, but it will be above the 114. That is what I believe. So this is the logic behind all these trades that we open beforehand and how I am managing them. I consider that there are no reasons to close them in this case would be all of them in profits beforehand. I still believe that what it sustained initially my idea of opening call binary options on dollar yen are still active and very healthy. So we're going to wait and see. And again, in this occasion, like last webinar, I'm not detecting or commenting any potential new opportunity. Why? Because the market already moved in that direction. So now it's only the timing to know if we're going to close them beforehand or not. But since the end of the month is near, from next week on, I will be deciding maybe the last thing on these trades, whether to leave them open or close them, etc. And we will start analyzing two different assets. If you're interested in maybe doing some research on your own analysis before, we're going to analyze GEPI, that is pound versus yen, and to analyze gold. I have never talked about gold in here in the binary.com's webinar, because I usually don't like to trade commodities. But I expect these two things to be very interesting for the next month. Overall, GEPI, because we're having this speculation on what, now that it's a plain fact that in the next days we will have the Article 50 triggered. That is no surprise. But the idea is that there are a lot of participants that are speculating that actually the future after Brexit for the UK is going to be better. So there are some participants that are speculating that actually the pound will turn bullish, very bullish, to close. For the ones that remember that I talked about that when that happened, the Brexit, The weekend after Brexit, we had a gap. The price didn't make to close the 137, and it couldn't. It didn't close it. So the market still has that 137 in the mind. So if everything aligns, we could have pound maybe moving widely to close that. And maybe cable is going to be an exception. Maybe it's going to have a life of its own, independently on the dollar, independently on the euro, just because of this, just because it will try to reset Brexit fears. So if you have pound moving up and dollar yen moving up, that I expect that the dollar yen fundamental trend will continue steady for the rest of the year maybe. That should mean huge movements for the GEPI in the next month or even months. So we're going to analyze that, and please open your mind to some other possibilities. These trades were opened with a 1 month time span. That has a reason. This trade was fundamentally biased. This was not a trade based on potential volatility with nothing underlying. No, it was a very fundamental trade. In this case, gap is not that fundamental because if that cross actually ends up moving higher, it's going to be based only on an adjustment of that gap that was not closed in cable since Brexit, after Brexit, sorry, and that dollar yen has a fundamental trend to the upside. So this is going to be an anomaly to space-time where things that maybe shouldn't be aligning will be aligning. It will be the midpoint between a fundamental and a pure speculative move. So I will track any further potential opportunities, and the thing is that maybe some trades on GEPI are going to be targeted not only 1 month, but maybe 2 or 3 months ahead. So just try to mentalize to that, do your research, and well, gold, now that there's a spree of dollar buyers, everybody wants to buy dollars, etc. The Fed, gold is losing a lot of its shine. So maybe we will try to, in the case that I detect something variously, because maybe it would be to the downside gold, maybe to comment on my trades here so you can make up your minds on your own personal financial decisions, okay? So I would like to thank everybody for showing up to the webinar. I would like to thank Charis for hosting and for recording the webinar, and all of you, of course, for being around. And remember that later on, I believe tomorrow, you're going to receive the recording, the link to the recording of this webinar. So if you have any doubts, if you want to recheck the price boxes, you can go there and check them out. And hopefully that will help you on your learning process, okay? And remember that I expect you next week. Next week's going to be Wednesday, March 22nd, okay? You will receive an email informing you the time, the exact time, because we have, apparently we will have daylight saving times, etc. So you will receive the email with the indications. So again, thank you very much, everybody. I hope that you enjoyed this, our webinar, WoW Trades. This was Alberto Alvarado. See you next time.